Hello, everyone, again. So let's continue with our learning sections, and this is one of the most interesting and valuable parts of our trading strategy on smart money. So in this video, we're gonna be looking at liquidity. So I'm gonna be teaching you guys everything about liquidity and how I see the market and how we here from our team we see liquidity and how to spot it and how we can map the charts to look for liquidity. And so let's start, right? So if you guys, just to make it simple for you guys, so because we can go on and on about how the large institutions, I think we went over that a lot on our course already. But as you remember before, I was always talking about how large institutions are the ones that move the market, and they are always looking for liquidity because they have these huge orders and they need a massive amount of orders to make the market move, correct? So like they need to fill these orders using liquidity in the market. So if you think about that, so liquidity is simply means like orders resting, pools of orders resting in the market, and that can fill the price of these orders. So the largest institutions can fill their orders, then they can buy, and since the forex market is so liquid, it has like so much money. There's like trillions of dollars traded every day. So they need to make the market move using like whatever is available, right, in terms of liquidity in the market. So let's just I'm just going to give you guys some examples of how we can see liquidity, right? Okay, so when we are trying to spot these areas of liquidity, there are two main ways that we use to map it and to kind of like identify these areas. So like these two ways we called inducement, right? And then sweep of liquidity. Did I spell it right? Oh yeah, okay. I'm just gonna put this thing here so you guys can remember. Let me give a space, or maybe like down here. Okay, so inducement and sweep liquidity. So let me just tell you guys how like sweep the inducement works first. So the inducement is like it's when price creates the structure, and it like as it continues moving, it creates the inducement. So it's inducing like people or the orders or the price to come down here, right? So it's like a magnet. It's like telling you, like, look at this. You see all these arrows here. Like, look at this area. Look what's going on here. Sometimes like we're gonna see like price, like making like higher highs like this, coming here, making inducement, going back there, and coming here and going up. So like this area here was inducing this demand. So price could come here to then continue up. So yeah, that's how it works. Like, so in the inducement, so one of the ways, like usually it's like I said, one of the main ways you're gonna see like the inducement, it's when you see like price, like let's say, let me just draw this guy here again. I didn't do a good job with the drawing. Right, so we're gonna have like a demand here, right? So you would see like a candle, like a demand down here. So instead of price coming down here to mitigate this area, it would create inducement. Here I go again with this. It would create inducement to this area below. So when price breaks again, like some like people that don't look at inducement, they would be taking like longs from here because it's higher high, right? So they would take longs from here instead of looking at the inducement of this area below. Okay, so this is one of the examples we can look at. So right here, so like if I was trading and analyzing the market. So right away, because I'm looking at this demand chain, I would already place my like the mapping. That's what I use, the little money sign to show me that that there was inducement to this area. So I wouldn't be taking any trades here because there was no liquidity taken here, you see. So like I would expect price to come all the way down here first to then continue the price. Okay, so let's continue here, correct? So we saw like when price came all the way down here to this demand that was induced. So we had this huge spike of price because here that was all the the orders resting, and it was all filled, making the price move. So like we came here, we had a push, we had a pullback, another push. So this would be like a fractal break, and then like this would be a CHoCH. So I want you guys to remember. I don't know if you guys remember, but when I said sometimes they're like what seems like a CHoCH, it can be a sweep of liquidity, right? So like because we're still on a bullish move, so even though the price came here, like we had a fractal break to the upside, and then so this would be after this break here, right? So this would be like a push, a pullback, and a push. So this would be the nearest low. So here would be the fractal bearish CHoCH. So instead, price, we would, because of the fractal break, we would have our demand here, correct? But because there was no inducement, remember, like I showed you guys, like there was no inducement to this area here. So like because there was no inducement to this area, like here, right? To price come to take the liquidity, it used the low of this move as to sweep the liquidity. So in this case, there was no inducement, and price, there was no sweep of liquidity. So the sweep of liquidity is the act of like sweeping like grabbing the liquidity, if I can say it better. So like right here, I use another line to this kind of move just to show that price will swap here. So I would use this 4-hour sweep. Okay, so like just to show that price, there was a reason why price broke this demand, was just to get the orders below here to fill the orders to continue up. So we're gonna be looking at like risk entries and confirmations entries. So that's why, like when we are looking to enter shorts from a counter trend, because this is a bullish move, we want to wait for, like, let's say if this could have been a CHoCH too. So that's what I want you guys to understand too, right? So we could have price come here, and then we could have like had another push down to continue here and maybe continue up. So this could have been a CHoCH as well. So but instead of just entering with a risk entry here, we would just like wait for a confirmation that this area is holding to then take the short like from there. But that's gonna be on the next lesson that we're gonna be learning about structure. Entries. Okay, guys. So first, right? Just going over this again. Inducement is the like price is creating this pattern or anything like this pattern or any move to induce the price, the movement to come here to grab the orders again to then continue a move. If this was like a bearish move, the same thing. Okay, so now we had, because price came here, we had a bearish break of structure, and we still push up again, right? So because if this was a CHoCH, we would have this and a push down, but instead price came here, and instead of we respecting the supply that was created, the supply that was created with the fractal structure, which would be here, right? So when we had a CHoCH, we have a CHoCH. Now we would have a supply here, but we can see that price did not respect the supply area that was created, and then we had a break of this area. So now we can be certain that this was a sweep. So like if I just saw this happen on the first time, I could just like mark this as a CHoCH, and then so like because I would wait for a confirmation here to see if this area would hold, but like I saw that this didn't hold. So if I see a break of these highs here just by a little pip, I would already like mark this as a sweep. Okay, all right, so let's continue. I'll just leave this here so you guys can look later or have as an example, so you can see that this would be like inducement to this area below. Okay, so again, right here, the same thing. So like if we think about people that trade patterns, right? Like this could be like a flag, right? A flag, maybe like this. So because like we had like this push, boom, second push, boom. So I say this because I have traded this way before, which like it was a nightmare. But now you can see, right? So if you traded or patterns or traded, if you still trade patterns and you're learning this new way, I don't want you to get offended by any means. I'm just showing based on my experience. Okay, so like this would be a flag, but with our strategy, we know that there's price resting here because of these equal highs, and there's price resting here because of these equal lows. Okay, so just like just to keep an eye on this, right? So like if you trade or used to trade pattern trading, this you would be entering on the break of this flag here. So but because like many of the pattern traders, they don't use supply and demand, they wouldn't know that when here on the break there was the price was creating inducement, right, with these equal highs to come mitigate this extreme supply area here. So like you just got, so like this was just to lure people to be on the wrong side of the market. So they create these patterns to say like, oh look, there's resistance here. So like if there's a break, you can just enter. But you can see that like after you enter, like let's say you would have like a stop here, and maybe like you would have your stop below that, like that wouldn't even be like a 1-to-1. Look at that. Like maybe it would be like, oh, you would wait for, I don't know what your rules for breaking it even would be, but that would be already a loss. Okay, so look at that. Or maybe even like this. All right. So this is a good example. I'm going to show you the example, like this exact pattern on another chart later on, or maybe I will just show this before I start this course, this section. So I will decide later. But anyways, let's continue here. So now that we know that this is equal highs and equal lows, right? So we know that these equal highs here are just creating inducement to this area, to this supply. So we see that when price comes and mitigate this supply, it fill all the orders it needed, and then we had a CHoCH, right? So we had a CHoCH here, and so the same thing, right? I don't know, some people might have a rule that if the flag fails here, right? So like if we fail to if we fail to go long here, right? We would have like an entry here, right? And we would go long. So like if it fails to go long here, no, now I'm gonna go short because that failed, right? So maybe, I don't know, like you would, if you had another structure here, you could probably enter short with the, let's say with the stops below, I mean above some type of structure here on the lower time frame, you probably would get another loss because, oh, what happened? You know, like because I got a loss here. I thought it would go up. I mean, I thought it would go up and then it went down. I thought it would end down and I got another loss. So this, but now that we know about the CHoCH and the like supply, liquidity, so we would see that, okay, now we had a real CHoCH here. Let me just mark this guy. So now we had a real CHoCH. Where is that? Boom. Okay, right? So first thing that price like wants to continue maybe down. We don't know yet. Okay. So we had the first CHoCH, right? We would wait because we had so this was the push, right? The pullback, the push again. But because this was because there was this internal, I mean, the internal of the internal structure here. So this would be the nearest low of this push. So our CHoCH change of character would be right here. Okay. So now when we have a CHoCH or a break of a fractal to the bear side, then we would have a new supply area here. Because like the reason there was a there was enough price here that made this push down, so probably there's like a level, a price level here where we can't be looking for shorts. Okay, so now like with our strategy we would like look for a confirmation entry here, and we could probably even like just take like a short all the way to this demand for a 6-to-1 now. Because we don't want to be like entering on the break or the break. We wait to buy on a premium price. I mean, sell on a premium price, because we want to wait. We don't want to like this price already happened, right? So we want to wait to come to a very good area of sales, so we can enter with like a small stop and then target the next structure, correct? So I hope you guys are like seeing what I mean, right? Okay, so let's continue here. So now that, again, right? So let's say that, oh no, now this is going down because we rejected and people are thinking that it's going down. But we know, right? We are following structure and we know that this area was already, let me just change this guy. So we know that this area was already swept. So like price already tried to break these lows and we couldn't break, and we just had a sweep of liquidity of these lows here. Let me see if I can just put in. So let's see. I'll just put like a, okay, I should make it this bigger. Sorry guys, I always try to make this looks like shit. Let me just delete. Okay, so like we know that price already swept this, and we already tried to break this below. So like we have another like a higher probability like place that if we might want to continue the move up, and because we already swept this area. So this could be an area that we could be looking for longs now to continue, right? You see, like the swing moves. Let me change the. So if we think about like the swing, right? Remember the first section that we studied, the swing moves of the market. Boom. Okay. To continue up. All right, so let me just delete this so you guys already know this. You guys are already professionals, so you don't need this anymore. So now we took a short, right, all the way from the top there. We know about liquidity. We waited for price to come back to like a very good area for sales. Then, because we know that this was just a counter trend, and price is still bullish on the swing time frame, I mean the swing structure, So we know that price might just bounce here to continue up. So what are we gonna do? We're gonna, of course, this is gonna play, right? Let me just, so like knowing that, like what we're gonna do? We know that we can already like target these shorts here for a quick 6 hours, 6 to 1, very good. Like you don't see this every day with like just regular strategies. 6 to 1, like just on a counter trend, and then we can be looking for like a 1 minute, even like a just like a 1 minute entry. Remember, I told you guys that we look at the 1 minute for entries. So we could be looking at the 1 minute time frame to look for entries here already, because we already know that this area was already swept, right? But like we don't want to be taking risk entries here. We're gonna learn this later. Sorry about mentioning this to you guys, but like it's just like the confirmation is just like we need to see that this area wants to hold. But because we had the sweep, there's already a very possibility that this might hold. So like we would take another, let's say like we would wait for confirmation here to then go up. Then we would take another, let's say I would even enter on the 15 minute, okay, with the stops below here somewhere. And then we could even get out here of this, because we know this is a weak low, right? The weak low is strong low. I mean, sorry guys, this would be the strong low, and that's the weak high. So we know that it's most probable that price will just break through these highs. So we could even like get like 50% off of our trade, 80% off, right? Or like just get out for 8 hour here, or 8.5 or something like that, or just like get out for like 80% and let 20%, 30% like go to the moon. So all right, guys, so this is the concept. This is super important. I think like this was one of the most important things that I learned with this strategy, and this helped me a lot to understand like market movement. Why am I always getting burned and always getting stopped out on these trades? Because because you gotta stack everything on top of the other. Because like how many times were you right about the direction of the market, right? How many times you were right that it was making higher highs and it was going up, but every time like you were getting stopped out before the move. So like you would try to enter on a break, and then you would get stopped out, and then price would go. You would try to enter a short here, then price would sweep you and then go again. And now that I remember another example here, right? So that's another thing. Like since price, just going back to this example because I remember another thing that I wanted to mention. So like since price already mitigated this demand that had the sweep, you don't want to be looking for shorts again from this, right? Right, because remember, so after we had this first fractal break, we would get a supply here, okay? So again, when we had another break of this low, so now we would have another supply area here, correct? But because this is creating a supply chain, like this came here, like it mitigated like a supply somewhere inside here, it broke down, it came here, mitigated this, and now we would have another supply area here. But again, guys, like we know that price already did this move, like it already completed the move. So we don't want to take another short from here, right? So we don't want to be taking another short. Let me delete this guy because it's kind of pissing me off. So you don't want to be taking another short from here because we know that the overall structure is bullish. unless we would get a break. Let me delete this. Unless, because like we already saw, we had a sweep of this zone. So like the job of this price action here was already completed. Okay, so if price comes here and then break this demand, we could possibly look for another. Let me see how I can do this now. So we could already kind of see like something like that, because like this area was already swept. So why did price break this area? You know, so like now this is gone. So like it had sweep, the demand didn't hold. So probably price wants just to like make a deeper pullback and maybe come here and then continue up, or maybe just die out from here. So, but we know that because price failed here, this demand failed to hold price, then we could continue with the supply chain and it's like look for another entry here, and then we can take the shorts again. All right. So let me just show you guys some examples on the real charts that I have open here before we finish this section. Let me see. This is like today. So like this is happening. I was just looking at some of the areas I marked here later on the week and on the month. So like I usually like delete like old mapping, because it kind of slows down the chart depending on how much zones you have. But we can like look here super quick on this price action. So here we were on the bullish swing move. So everything inside here was just internal structure, as you can see with the orange dots. Okay, so here, right, we tried to break the high, we couldn't. Then price came here, so it was supposed to continue this internal move. It was supposed to respect like some of the demands that we had here. Sorry guys, I already deleted some of these. Let me see if I can grab like just a demand area here. So probably like something like this. Let me see. I'm just looking at this now, so hopefully I'm not gonna make any mistake. But you see here, right? So I already like tried it once to break that, came down here. Now we had the break with the body closure on top here. So we had this strong low, weak high, strong low. This was supposed to be the weak high, but then this was the first sign. You can see there that we had induced. Where's the line? So we had inducement to this area below here. Where is this? So we had inducement to this area below here. So price just came here, mitigated, reacted, came here. There was volatility. There was probably something like news or something. That price came all the way up there. And then, but we had already, remember what I just told you guys about the break, right? Like it already broke. So the job of this inducement was for price to come here to mitigate this demand, right? Because we had inducement here. So since this demand couldn't hold, and there was a breakdown here, so we went all the way up there and we continued down. You see, like that's why we could. You see, like some like the example that I just told you here. So price broke here, came all the way up there to mitigate this supply chain, and then continue down. So we could be looking for entries on this 15-minute here. All right. So just one example. This is a little choppy because like overall you can see it's kind of sideways, but we have a lot of room to trade inside of here. Just knowing that we are on the bullish move again. So now, like we saw inducement, but price just broke through. Why? Because there was like a failure to break on top of there. Okay, So like when you see a failure to break like a major point like in the market, you could already expect that probably it wants to pull back a little more like before continue up. So uh, it didn't respect this demand, so we had the mitigation of the supply, and then we had the internal structure turn bearish. We had a like, you see, like push, pull back. The internal of the internal kind of turned bearish here somewhere. Then we waited for a pullback again. Guys, this will be, it's like I'll try, I'm just giving some examples, but there's nothing better than practice. Like I can't spend hours and hours here in one day. You guys gonna burn out, but this will be with the daily analysis we're gonna be doing every single day. This is like, as a trader, this is something you'll do every single day of your trading life. So don't worry, you're gonna have enough practice. Like in the beginning, I didn't know about this either, but as more that you do your analysis, the better you're gonna become. Okay, so like another example here. Remember this was inducement to this area. So like before, you can see that this. Let me try to hide this. You can see that here we had. So like we came here, we had a pullback, we had a push. Price came, reacted to here, to this demand, and then we had a CHoCH here, boom, CHoCH. So when we had a CHoCH, we had this little pullback here. You can see, remember what is the internal, how do you say, the inside bar means? It just means that it like, even like on the even lower time frame, it's making like a pullback. So like we had like a small CHoCH here, price pushed, pullback, but you can see that the pullback did not mitigate this extreme candle, right? So like you can see that it got really close. If it like, there's a rule I have for me. If it's the same pip, if price here, right? Let's say it's 100, just to give like an example. If this like pulls back to 100 and this low of this candle was 100, this is not a mitigation for me. So like this pullback here would have to at least go to 101 and then push down. So that would be a mitigation. If it's 100 on this lower number here and 100 on this higher number here, this is not a mitigation. And this one didn't even like got to there. It would probably be like a 95. I'm just giving like a random example to make it easy. But okay, let me put on the charts again. So here, let me just turn off for a second. So here, like I would see this, there's inducement. This high here is creating inducement to this candle, to this area, saying like, hey, look at here, like I didn't touch that guy. So price will probably come back to touch there before we go down. Okay, so like the inducement, it's literally like a arrow, like look at that place because I might go there again. So what happened? We had inducement here. So once we had the sweep of the liquidity, now we swept the inducement of this zone. So now we have a swept area. Okay, so now we have this new supply. Price came here again, but because you see, like we had already mitigated here, there was no inducement to this area. So instead, okay, so like you're gonna see this everywhere, but like you see, like price was here, it came to mitigate this area, broke down again, but because there was no inducement, I don't know what's going on with my charts. Okay, but because there was no inducement, remember the chain that I showed you guys? Look at this. So like in this example, right? So price could just have swept this zone here instead of going down there. So it could just have done like here, coming back, and then pushed up. So this would also be a sweep of the zone, like it happened here, right? So it came here, mitigated that, came here, mitigated that. So instead, there was no inducement or sweep. So it came to sweep these highs, and then it pushed down again. But now, like you would have to do the whole analysis, but like I'm just showing you some examples of what happened. Here we can see another one, like inducement, but another thing, right, guys? So like price doesn't, every time that there's inducement, it doesn't need to come here and like beautifully like move like and give us an entry and go down. No, price may just leave this inducement here for later on, maybe in a month or a week, come back and retest that. But we already got to where we wanted to be. So you already completed the move. So like this, like we don't need to pay attention to this anymore because this already happened. But later on, you can see that this induced area, you see that there was a reaction there. So like, let's go there now. So we can see here, right? We had a push, a pullback, another example. Remember here, guys, I was telling you, push, pullback, push. Instead of being a CHoCH, it was just a sweep, okay? Same here. The CHoCH can be just to mitigate, it would just to facilitate the internal, the fractal, just to facilitate price to come down here to mitigate this. This was the job of that move, was to come here, down here, to continue up. So same happened here, you see? Let me make this bigger. So we had the push, the pullback, came here. So we would mark this as the CHoCH first, but we saw that there was this unmitigated zone, demand here, right? And like, look at where it went. There was like this candle here, like it made inducement to the zone below. So price just gave the CHoCH to mitigate this demand to push up again. And look what happened. Remember the example? Because this was already swept. So now this is a higher probability. So now this is a high probability area that it would go up. So look at here. And this I'm just like, I didn't even look at this before. Like this I was just looking before you starting the practice, and I saw the chart, so I wanted to go over this. But you can clearly see here, right? Because this was already swept, this area. So when price broke structure again to the upside, it just can, I remember this was like on last week sometime, and there was this huge news. I think this was NFP, I believe, I'm not sure. But even on like volatility news, look at where price came. It broke, closed above, and where it came here, it respected this swept zone, and it just went all the way up. Think about, you don't want to enter trades like this, but think about a trade like that. You enter on a swept zone like this, you would refine this demand, probably even on the 15. I'm not even looking at the one. Like, put your stops below here, and then like price would crazy. You see that, like the next target would be this demand. This daily supply from 10-1. But this was new, so I wouldn't trade this anyways because I want to get the slippage. Another sweep, you see, push, pull back. This was supposed to be a CHoCH, but like price just continued below, so this was a sweep. Very good area to look for shorts, but because price already mitigated a very high probability place to maybe it wants to pull back from this place. I'm not gonna be looking at this right now, but maybe we would have like a pullback to this area here, but because this area like has inducement, there was a sweep, we could look for shorts from there again. And it continues over and over and over, even here, right? Like I see this so much, like every single day, that I sometimes I don't even mark anything. This was today or yesterday, Monday. Like today, today is Tuesday. That was yesterday. Like sometimes I don't even mark it, but because there was inducement there. Uh, this class is more extended than I intended. Sorry, you guys, but this is very good for you guys to understand. Okay, remember, you don't wanna be like chasing. You see, like price came here, pulled back. You don't wanna be chasing price down here, since there is inducement to that area above here. You don't want to take continue, like even on our strategy. Oh, I'm gonna take a continuation, but like okay, but price is already so extended, so you want to be taking continuations down here, knowing that there is like a lot of inducement and liquidity on top here, and price may just come to mitigate this area, like it did. You see, so like it came here like beautifully, but I think this was during London time, and I didn't take any trade here, but there was a trade here somewhere. um, so price just came to this induced zone, and then you could take another short from here. I don't know where. Yeah, but because like when it mitigated that zone, it came and it mitigated another demand. So I would probably not be, because this could just be like doing this to go up. But like since we had price push here, yeah, I'm not sure right now. I would have to go to the lower time frame. Maybe the 1 minute would be clear. But just to show you guys the how powerful this strategy is, and how powerful it is to stack market structure, supply and demand, and liquidity together. Like it's a killer killer like knowledge for your trades, and you would be ahead of like most of traders already just by looking at this, because it would always be like watching your back in some way, right? Okay, guys, so enough with the examples and the teaching about this. And like I said, don't worry, because we're gonna be going over this liquidity and everything every single day of your life. So have a good one, guys, and I'll see you on the next video.